Hello, traders. It's 8:02 a.m. on Tuesday, the 5th of February, 2019, State of the Union Day here in the U.S. We get to hear from our POTUS this evening on this wall, I'm sure, and other items. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, the market stance is. Wait a minute. Okay. The market stance this morning is on the buy side. Sentiment is towards risk on, and the leader today is the DAX, 156 points, 1.4%. The Euro Stocks 50 up 1.14%, followed by the Nasdaq. The Nasdaq had a very strong day yesterday. The techs led the market, dragged the market up by the nose hairs yesterday. The Dow is up 98 points, 0.39%. The laggard this morning's crude taking a bit of a hit, down 72 cents. Also, the VIX fell below 17 yesterday, trading at 16.4 currently. Overall, though, it does seem that the market's allocating the risk, although the 10-year notes are up a tick and the bonds are up 5 ticks this morning. Looking ahead at what's on deck, uh, we do have the U.S. market composite PMI final, which doesn't really have that much of an impact. Wait a minute. This ain't right. Yes, market PMI final. These are final figures. They come out at 9:45 Eastern. We have ISM services at 10 Eastern, expecting 59.5. And then in addition to that, we have IBD tip, which is a low importance figure, and then we get the API crude stocks at 4:30, about 15 minutes after the pit close, and then State of the Union at 9 p.m. Eastern U.S. time this evening. That's what's in front of us. The Asian markets ended up climbing in sympathy with the U.S. last night, but overall, the market is showing some strength, and the market's on hold here. The S&P is on hold in this key area that I have marked at 27, 26, 75 on my stock zones. Let's take a review of yesterday. Yesterday's expectation. Let me turn the speaker down. The news guy keeps babbling on. Yesterday, I expected the market to make a small push up into the overnight high and then drift down, and I was looking for a selling day. I was looking for us to fall below 2690 potentially. Did not happen. Otherwise, was looking for for it to open, participants to sell, search below the 2694 area, and then push up in the S&P. But remain in range. Did not happen either. Neither of my key scenarios played out yesterday. We saw some pretty good consolidation. It looked like we might get scenario one, especially with the release at 9 Central, 10 Eastern, but then it turned around and just climbed. Here's what we saw. Okay. I think it was durable goods and factory orders at 9 a.m. yesterday came out worse, and it caused this quick move down. And so I was looking for a pullback and then continuation through the low down to 2690, and then a run under scenario one. Did not happen at all. Instead, we just stayed sideways. We just popped around, bopped around, bopped around inside of the prior day's major acceptance area. You can see the point of control here from Friday, and we just traded around it. The market seemed weaker to me until it broke the IB. And just about in here, just about in this area right here, we saw the NASDAQ completely diverged from the other indices, and Nasdaq started pushing its high, the prior high a day, Friday's high. So the Nasdaq, while the S&P was down here on a relative basis, the Nasdaq was trading about here, about in the 2712, 2713 area, relative on a relative basis in the ES. And as soon as we broke the IB high, we had a small pullback and then off to the races we go. I did an impromptu yesterday on Convergent and talked about this. I'll cover this very briefly, but since the selling in the morning, so you have these big rotations down here, these zigzags, um, from that point on, as soon as we saw the NASDAQ start to take the highs, we could see that the rotations improved dramatically to the buy side versus the sell side. See, the sell side did not have much in it when you compare the white rotations, the positive rotations against the negative. Really, you could see the dominance there by buyers. Huge divergence between the small lots and large lots. Large lots were active from the open yesterday. That's the yellow line. These are considered very large lots. These are 100 lots or more per tick, per trade. And so these, uh, these are just big executions, and I didn't see them as stop runs, as a stop. It looked to me on the volume scope like it was deliberate selling, like hitting the bid uh, inside of a bar's range. So these guys here, the yellow guys, seemed very serious about selling, and we could see that there's a clear trend by very large lots to sell yesterday, and then they were countered by the small lots, which are 9 lots or less. And those two were basically battling it out all morning with the net, with the bars, the bars you see here, the candlesticks are the net delta. The net delta simply traded with the large lot delta, which is anything greater than 9 but less than 100 lots per tick. This is on a consolidated tape basis. These trades are reconstructed using the exchange's tick ID, so it's quite accurate as to what things really look like from a trading perspective. So very, very odd behavior there. Seeing this selling in the morning and seeing the action in the morning where we are successfully making lower lows. We're having a hard time holding the open. The open is these little green dots. We're having a hard time holding and staying above the open. To me, I was looking to push the short side for sure yesterday, and of course that didn't quite play out. We ended up pushing all the way up into the 25 area. So that's how yesterday played out. The overnight session, we opened back up. We open back up and test a little bit lower. We test this closing swing low, which was this tight consolidation, which held the point of control. We came up here and held this for quite some time into the close, and in about 10 to 15 minutes into the close, we had this burst up. This is another thing we talked about yesterday on yesterday's impromptu. If you're a convergent, the impromptu was posted in the notices board. It was not sent out by email. It will not stay on very long because it is an impromptu. But in any case, we pulled right back into this low volume node around 27. 1550, 2716, and then just held sideways. So almost all of the overnight's range to this point was really held in this portion of the profile. Very, very ugly, very balanced, very low range. And then the Europeans kicked in right in here somewhere and started to mount up. Europe had pretty good some pretty good releases. I believe Europe had, let me take a look here. Europe had PMI services that showed the Eurozone, France, Spain, and Russia beat, and the UK and Germany missed. And so they were pricing that in, and of course trading in sympathy with the US on the reopen. And we've been holding this profile, which a very odd looking profile here. It looks like a double distribution profile where we're separating the lower distribution of yesterday from the upper distribution, and we've been holding sideways. Let's take the volume scope real quick. Let me fix this to see what kind of a battle we have here. So if we look at the volume scope, here's your burst up on the European Open. This is the European Cash Open right here. An immediate burst up, and then we slide into this big area marked in red, in a red outline on the stock zones, 26, 26, 75, and then we've just gone completely sideways since then. We don't have very much to report here, and it's done that. It's held this area for probably the last 4 hours at least. We've been trading for about 4 hours in this range here. So what we have here is a very, very tight coiled consolidation, and we're opening in that. We're opening out of range. So it's something to behold. There's a lot that went off here. The overall volume in the overnight session is really is okay. I would almost call that normal for the recent past. And so there's nothing to glean here, but look at yesterday's overnight session. Yesterday's overnight session is clearly Gaussian, clearly consolidating, and also the volume yesterday was very, very low, and we ended up with an imbalance that really stretched out. Yesterday's profile is clearly a trend day profile. I'm expecting more of the same today. I'm expecting the market to consolidate quite a bit on the open in an open auction out of range, and then for it to break in either direction. If you recall, last week when I talked about the fact that the market has now squeezed into the prior microcomposite, maybe that doesn't seem important to many, but the fact that we are back in this October through December range, remember when we got above 2607 or so, and we were holding prices pretty well, and then we broke right here. We broke up, and I told you that the magnet is likely to be this 27.35 and a quarter. This is the most traded price by volume for the entire year of 2018, and it's a significant magnet in this region. We are now only 8 points away from it. So this, once it gets into this MC, the expectation is it's likely to have some pretty wide balancing swings. As we get tangled up, I think the chart you can see it best in is actually my flex chart. Let me pull that up. The flex chart's a little bit messy because I pull my levels off of it, but it shows very clearly what's happened here. Look at that massive profile. See that gray profile? That's all of last year to the present, and it's basically showing. Oop, can't use yellow anymore. Let's use something else. Blue. So what it's showing is that we cleared the low volume node, the neckline of the MC point of control. The next neckline is up top at 27.55. The one down below is right here, 27.03 or so, and we have cleared the neckline and we have climbed this profile. Now tip this on its side so that it looks like a mountain peak, and the peak of the mountain is 27.35 and a quarter. Once we clear in traditional auction theory or market volume profiling speak, once we clear the neckline, we are likely to test the most traded or accepted price in the region. It just makes sense that the market's likely to continue climbing until it reaches the most traded price in the region. You can see where this comes from, and that's why I'm showing you this, although it is a messy chart. You can see that this price up here is very important. So keep an eye on 27.35. It should be on your radar, and we're likely to test that. What am I expecting for today? Not very much in terms of economic releases or anything, but I'm looking for an open auction at the moment. So let's move into our planned portion of the show here. So what are we looking for scenario one? Scenario one is we're likely to open here right on top of the key stock zone. I'm looking for this to be somewhat trapped. I'm looking for a test higher to pull back, come back into the range towards 27.17, hold, and sit steady. Today, I'm looking for this to go somewhat sideways once we open. I'm not expecting it to continue running, but I do expect a higher high, and of course, we're opening up higher. Who knows what the president will say this evening, but the market's likely to be paying attention to that. There's also a report this morning from BlackRock's reader. He's saying that the Federal Reserve wants to raise interest rates 1 to 2 more times this year and will do so if inflation gathers steam. So you want to pay attention to any inflation measures and see if they tick up, then the market's probably going to respond with some selling on that. The secondary is we open, we test down, we push into this 27-21 area, consolidate, push back out, and then consolidate just above, and then start walking our way up to 27.35 secondary. The tertiary plan is if we have a quick drop that gets an impulse out early and we see that delta is congruent or in the same direction, that I'm looking for this to push into 27.35 and push through this 27.37 area, this thick area here, and then come back in the afternoon. I'm not expecting this to be a running day, a trend day up, just like we had yesterday. Yesterday was officially a trend day up. I'm not expecting a trend day up. Probability of a trend day up 2 days in a row is relatively low in this product. It's in the 21% that a trend day follows a trend day, something like that historically. So I'm not expecting this scenario 3 to play out much. But if we do break on scenario 1, if we do break through the point of control and push the overnight low, we may see ourselves at 27.06, 27.05 fairly quickly. That's the better opportunity in terms of day trading. Okay. So that's all I have for you. Good luck today, and of course, as always, I'll catch you tomorrow. Convergent members, we do have our trade talk this afternoon. It'll last, we'll run it for an hour instead of a half hour. There's no study hall this week, so I'll catch you at noon Central, 1 Eastern at the trade talk. Take care.